Hey everyone, and welcome back to another Tesla weekly video for today, the first one of 2025. So if you're new here, what do? We look at the weekly China insurance numbers, we look at some numbers out of Europe, and then some specific news with regards to Tesla that happened in the last couple of days. In this video, we're going to do exactly that. Go back over the production and delivery numbers if you missed that last video, share my extra thoughts there, and then touch on the Rivian Ford Cybertruck discussion as well. So if you're new here, hit that subscribe button. We really appreciate that. We're going to reach 100,000 subscribers this year. So if you're new here, hit that red button. It's free. You can always unsubscribe later. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So interestingly enough, on Friday, Tesla stock was up 8.22%, which means that it just gained back all the losses that happened after the production and delivery numbers came out. Now, before going into that, the Tesla weekly insurance number for last week came in at 18,600. Year to date, we're going to close it at up 7.7%. Of course, there are still a couple of days missing from, earlier this week. You've probably seen this report as well that BYD delivered 595,000 pure electric cars in Q4, bringing their total of 2024 BEV sales to 1.764 million cars, close to 1.765 million cars. Overall, global BEV sales, Tesla was down 1% year over year, BYD up 12% year over year. In Q4, BYD also beat Tesla by around 100,000 cars. Now, of course, Tesla, United States, huge market, BYD, not. But what's also important to note is that, BYD cars are overall much cheaper than a Model 3 and a Model Y. So imagine what will happen once Tesla starts offering cars at prices much closer to BYD's. Moving on to the select European countries, which make up around 60% of Tesla sales in Europe. So that's the UK, Norway, Netherlands, Sweden, Denmark, Italy, Spain, Switzerland, Czech Republic, and Iceland. The number came in at 5,000. And as you can see beforehand, we've had, quite a good run up. And so my estimate was that we're going to be closer to 9,000. Well, I was completely wrong. But overall, Q4 was still strong in those select countries. Year to date, sales are up 13.6%. Just a quick FYI here, 89% of all new cars sold in Norway in 2024 were electric. That's up from 82% in 2023. So when you hear people say, oh, electric vehicles in cold environments, they will never survive, why should I buy it? Well, I guess the Vikings don't know what they're doing, right? Moving on to sales in the United States, these are some estimates numbers. So for Q4, the number was 58,000. So here I was a little bit lower because the prior two quarters was around 52, 53,000. So I thought it would be around 53, 54,000. Okay, it came in at 58,000. Now, since Tesla is just a car company, of course, it never makes that much sense to just talk about the energy side of things, which is growing quite quickly and has much higher margins as well. The only issue would be that, the Tesla energy storage deployment rate can vary quarter over quarter, right? Yes, it continues to go up on a year over year basis, but as you can see, the growth is not that steady. We can go up quite a lot one quarter, then drop the next, and then go up quite quickly the quarter after that. And remember, this is without the Megapack factory in Shanghai, which will be up and running pretty soon. And of course, I hope you noticed the sarcasm when I started to talk about the energy side of the business. Now, switching to the production and delivery numbers, right? If you missed that video, it's basically this. I mean, if you're interested in Tesla, you probably already know these numbers. So Tesla delivered more cars than what they produced, which is great when we're going to talk about free cash flow, because production, this is cost, cash outflow, and since the difference between production and actual sales deliveries is 36,125, we will have probably a positive cash impact of over $1.2 billion in Q4. Now, this is an estimated number because I am using the cost of goods sold of Q3. That might change, of course, in Q4, but I still expect the positive cash impact to be above $1 billion. So yeah, we've talked about these impacts in the previous video, but if you missed that, let me repeat it. This number is basically the difference between production and delivery. This number right here, the 11,193, is the difference between Tesla's actual delivery numbers and what the analysts were expecting. And then this number right here, $470 million, is basically the miss, right? If you take the $11,193, multiply that by the, last quarter's auto ASP, average selling price, you get this figure right here. So yes, it does impact revenue, but not that much since energy came in much higher and energy has higher margins. So the miss here and the beat on energy gets canceled out and actually gets added in a positive way because of the beat in energy. And the last number is this one right here, $20.8 billion in automotive revenue for Q4. Another guesstimate here. You basically multiply this number, this delivery number, times the last quarter's auto ASP, and you get this number. It's going to be down. If it comes at this number, it's going to be down year over year, up a little bit quarter over quarter. We've also had the China wholesale number. I forgot to mention that previously. So that number came in at 93,766. In the next coming days, I hope that we're going to know the mix between retail and export, and then also the production number for December. These sheets are available for members of the channel. If you don't want to pay for that, that's completely fine. You'll just have to wait for the Tesla weekly video, and I'll just reveal it for free. Touching back on Tesla's free cash flow, as you can see, it has not been stable at all. The expected number for fiscal 24 is expected to be $3.136 billion, growing quite quickly in the next 2 fiscal years. Now, as we've just seen, we might actually get a much bigger number than this because of the positive impact from production and delivery. But then again, with Tesla expanding, building new factories, new models, etc., don't expect a straight line up when it comes to free cash flow. Now, I know some people are already comparing Tesla's rise in free cash flow to maybe what Nvidia has experienced previously, right? Look at this rise in free cash flow for Nvidia. I mean, this is truly one of a kind, I believe. Now, to compare Tesla and Nvidia is a bit strange because if we look at free cash flow margin for Nvidia has gone from 14.1%, which was the lowest point right here, Q4 2022, which was already higher than Tesla at 9.3%, to now closer to 50%, where Tesla is now rebounding a little bit, still sits at 3.7%. Gross margins for these companies are also very, very much different. So no, I don't think we're going to experience the same thing right now. Maybe in the future with FSD, with robots, margins there are much higher. Maybe that could happen. Last couple of things here. According to Troy TSLA, Cybertruck sales for Q4 were as follows. In the United States, 9,600. In Canada, 1,800. Okay, I still don't think these numbers are 100% correct, but let's just run with those because we've also got the numbers from Ford, and it does seem like in Q4, Ford sold more F-150 Lightning in the United States. Now, this is the important note I want to add here. Ford sold to dealerships. The dealerships then have to sell to actual customers. Tesla sells directly to their customers. So we don't know 100% how many of those 10,703 went to actual customers and which ones are still sitting on dealership slots. By the way, this is also down 10.1% year over year. As for Rivian, they said that they produced 12,727 vehicles at its manufacturing facility in Normal, Illinois, and delivered 14,183 vehicles in the same period, which also means here produced less vehicles than what they delivered. On a full year basis, same story, they produced 49,476 vehicles and delivered 51,579. Now remember, they told us that in the last quarter of the year, they expect gross profit to be, narrowly positive. And we can see that gross profit has been improving in each of the last couple of quarters. So maybe Q4 might be the quarter where we're going to see gross profit be actually positive, which of course could be a good catalyst for the stock. The stock was already up, I believe, 22% or so when they announce the production and delivery numbers. So that's great. The only problem here is that, well, delivery numbers keep coming down, not really going up that much. And that will definitely have to change. So remains to see what happens. I do hope that they're going to be successful because I actually like Rivian. I just don't like the stock, but maybe it's a good way of trading. Could be. Anyways, last thing here is a, well, price target upgrade from $298 to $404 by Canaccord, and they maintain a buy rating. Despite weaker than expected deliveries, we are sticking with our buy and raising our target from $298 to $404. This target is based on approximately 40 times, up from around 34 times, their 2027 non-GAAP EPS of $10.11. They feel this multiple is justified based on the multiples and growth rates of Tesla's comp set, which they deem to be a group of mega-cap tech stocks including Alphabet, Amazon, Apple, Meta, Microsoft, and Nvidia. This set of companies trades at a median of around 23 times 2027 estimated EPS according to FactSet, but has a combined revenue growth rate half of Tesla's from 25 to 27. Longer term, Tesla also has a generational set of growth opportunities ahead, including EVs, autonomy AI, energy storage, and robotics. We acknowledge the limited upside implied in our price target, but believe it is appropriate given the near-term volatility. To be honest, it's quite refreshing to see something like this. Now, if we do a quick reverse DCF here with the following assumptions, well, we plug in the free cash flow trailing 12 months, terminal growth rate of 4.54%, then a discount rate of 8.39%. How do I get those numbers? Implied equity risk premium 3.85% plus the 4.54%. I use this reasoning right here as what uses the same. Of course, you can change it. You can change to 3%, 2%, 5%, whatever you want. It's really up to you. Either you do it company specific, the general numbers, the 2, the 3, the 4%. But then again, why do we generalize? Each company is quite different. So we go with what the market here implies. And so to justify today's price, Tesla will have to grow free cash flow by 41.1% for the next 10 years. Which means by year 10, they're going to, well, expect to generate $112.9 billion in free cash flow. Is it possible? Well, if you think that Tesla could grow as fast as what we've seen with Nvidia, then yes, it is possible. If not, then you might say it's just very, very expensive right now. And so that's about it. First episode of Tesla Weekly in 2025. Do share your thoughts down in the comment section below. Like, subscribe, do all of that. And I'll see you all in the next one. Bye-bye.